Welcome back to the Daily Crypto Deep Dive. And today, we need to talk about something that sits right at the center of this current financial crisis. Because this is no longer just a story about oil or war or stocks or crypto on its own. This is a story about how money moves before the public gets the headline, who seems to benefit first when global events suddenly shift, whether the game is actually fair, and why all of that matters if you are holding Bitcoin, Ethereum, XRP, Solana, or really anything in this market. We are going to break down the ceasefire rally, the roughly $950 million oil trade placed just hours before the announcement, the way money then rushed out of oil and straight into shares and risk assets, what analysts are saying about it, whether something like this could actually be legal, and then the bigger question underneath all of it, which is this: is this exactly the kind of moment that reminds people why crypto exists in the first place? Reuters reported that traders placed a huge, roughly $950 million bet on oil falling at 1945 GMT, and then Trump's ceasefire announcement came at 22:30 GMT. After that, oil collapsed, stocks surged, and the entire market mood flipped almost instantly. Reuters also tied it to another huge and very well-timed oil trade in March, before Trump delayed military action against Iran's energy infrastructure. That is why this is not being treated as just another smart macro trade. The timing is too clean, the size is too big, and the pattern is now too obvious to ignore. Let's start with the bigger backdrop, because this current crisis created the conditions for a move like this to matter so much. For weeks, markets had been trading with a serious geopolitical premium. The Strait of Hormuz is one of the most important choke points in the world for oil and gas, and when the threat of disruption rises there, every major market starts repricing. Oil goes up because traders fear supply shocks. Inflation expectations rise because higher oil feeds into transport, manufacturing, and consumer prices. Bond markets adjust because central banks may need to stay tighter for longer. Equities get nervous because higher oil hits margins and growth. And crypto gets pulled into that whole machine because whatever people want Bitcoin to be philosophically, in market terms it still responds to liquidity, macro stress, and shifts in risk appetite. So when the ceasefire was announced and oil suddenly dropped hard, this was not a small side story. Reuters reported Brent down 13.57% to $94.44 and WTI down 15.87% to $95.03 after the two-week ceasefire announcement. That is where the suspicious trade becomes so important. According to Reuters, 8,600 lots of Brent and U.S. crude futures were sold in that big bet before the ceasefire announcement. Reuters specifically noted that the scale and timing were unusual, especially because large orders like that are normally worked much more carefully to avoid moving the market and exposing the trader. In plain English, this was not subtle. This was not somebody quietly scaling into a cautious view over a full session. This was a giant directional hit, and it came not long before the public got the headline that sent oil sharply lower. Reuters also reported that this echoed a roughly $500 million oil trade on March 23rd, shortly before Trump delayed military action against Iranian energy infrastructure, another move that caused prices to fall. Once you have two giant, highly profitable, closely timed trades around the same geopolitical theme, people naturally stop asking whether somebody got lucky and start asking whether someone had access. Now, that does not automatically mean a crime has been committed. That distinction matters. It is perfectly legal to form a strong market view based on analysis and to take a big position if you have conviction. If a hedge fund, commodity desk, or macro trader looked at shipping signals, diplomatic language, military incentives, political pressure, tanker flows, and options pricing, then decided that a de-escalation was more likely than the market believed, they are allowed to short oil. Markets depend on people taking positions before a headline becomes obvious. The problem comes if the trader had access to material confidential non-public information that they were not entitled to use. The CFTC has made clear in its enforcement materials that misappropriation of material non-public information, fraud, and manipulation in commodities markets can all trigger enforcement action. That is important because some people still talk as if insider-style conduct only really matters in stocks. It does not. Commodities and futures are not exempt from scrutiny just because they trade in a different market structure. So the honest answer to "is this legal?" is maybe, maybe not. And right now, nobody publicly knows. If this was just elite macro analysis, then yes, it could be legal. If it came from improperly leaked or misused confidential information, then no, regulators could absolutely have a case. But that is the real tension here. The public sees the timing and thinks it looks rotten. The law needs more than that. The law needs identity, communications, sourcing of information, chain of custody, and evidence of misuse. So for the moment, what we can say is that it looks suspicious enough to deserve scrutiny, but not enough to confidently claim illegality. That is a very important line to hold, because once you overstate these things, you lose credibility. But once you understate them, you also miss the bigger truth, which is that market trust gets damaged even before any formal finding comes out. And trust is really the core issue here. Because what ordinary investors saw over the last day was brutal in its simplicity. Oil panics higher during geopolitical stress. Then, just before a ceasefire announcement, somebody puts on a trade big enough to make serious money from oil collapsing. Then the public gets the news. Then shares jump. Then crypto jumps. Then analysts start talking about a relief rally. And the average person is left sitting there wondering whether the market is a machine for price discovery or a machine for rewarding access. That feeling matters more than people realize, because that feeling is one of the reasons crypto still has such a strong philosophical pull, even when its short-term price action looks just like a leveraged tech asset. Let's talk about the move into shares, because that also tells us a lot. As oil dropped, the market immediately rotated toward areas that benefit from lower energy costs and reduced inflation pressure. Reuters reported steep declines in energy stocks, with names like Exxon, Chevron, BP, Shell, and others getting hit as the crude rally reversed. At the same time, broader equity markets surged because lower oil means less pressure on consumers, less pressure on transport-heavy sectors, and potentially less pressure on central banks to stay restrictive. Business Insider reported that JP Morgan turned more bullish after the ceasefire, saying the S&P 500 could have room for another 6% pop if the truce holds, and the Strait of Hormuz continues reopening. So this was not just a market breathing a sigh of relief. It was a full reallocation across asset classes. Money came out of the fear trade and straight back into risk. And crypto followed that move very clearly. MarketWatch reported Bitcoin up 4.5% to $71,927, and Ether up 6.6% after the ceasefire announcement. Barron's separately reported Bitcoin around $71,825, Ether up 7%, XRP up 5.5%, Solana up 6.5%, and Dogecoin up 4.4% on the relief. That matters because it shows you how the market is classifying crypto right now. In this moment, Bitcoin was not trading like some isolated anti-war hedge detached from mainstream finance. It was trading like a global risk asset that benefits when oil drops, inflation fears cool, and investors feel safer owning beta again. That does not kill the digital gold story forever. But it does show that in live market conditions, Bitcoin still responds strongly to the same macro currents pushing through equities, yields, the dollar, and commodities. That is the crypto angle people need to understand properly. Crypto now lives in two worlds at once. On one side, it is still a risk asset. When liquidity improves and macro fear eases, Bitcoin and the wider market often rally with stocks. On the other side, crypto's long-term appeal still feeds directly off distrust in the traditional financial system. And stories like this giant oil trade pour fuel on that distrust. Because even if Bitcoin rallies for the same reason as the Nasdaq on a given day, the reason many people keep believing in crypto over the long term is because they think the existing system is structurally unfair. They think political access, information asymmetry, and institutional advantage shape outcomes before the public ever gets a chance to react. So you end up with this strange but very real duality. Crypto can go up because the system looks calmer, and it can attract believers because the system still looks rigged. Analysts are also warning that this relief rally may not be as stable as it looks. Reuters' investor reaction coverage showed a mix of optimism and caution, with strategists noting that the ceasefire is only temporary and conditional. Crypto holders need to understand that too. If oil turns back up sharply, the market can very quickly move from relief to fear again, and Bitcoin may not be spared just because it is supposed to represent an alternative system. So who is doing this? That is the question everyone wants answered, and right now the truth is we do not know publicly. Reuters reported the trade, the size, the timing, and the earlier March example, but not the identity behind it. That means we are still in the stage of pattern recognition, not conclusion. But if you are asking the right question, it is not just who placed the trade. It is who had the confidence to size that trade so aggressively so close to a geopolitical announcement? Because even in markets full of sharp traders, most people do not hit that kind of size without feeling they have a real edge. That edge could be analysis, it could be relationships, it could be information flow, it could be something entirely legitimate, or it could be something regulators should care about very deeply. That is exactly why the story matters. My view is simple. This deserves scrutiny. Not because suspicion is proof, but because healthy markets cannot just shrug at trades like this and pretend timing of that quality means nothing. If there is a clean explanation, fine. But if there is not, then stories like this reinforce one of the strongest arguments for crypto in the first place. People are tired of feeling that the old system rewards whoever hears it first. And that is why this deep dive matters for Bitcoin and the wider market. Not because the oil trader bought crypto, not because the ceasefire is itself a crypto event, but because every time traditional markets look opaque, connected, and two-tiered, the case for borderless assets with transparent ledgers and self-custody gets emotionally stronger. That does not mean crypto is pure. It does not mean whales do not exist here too. But it does mean that moments like this keep pushing people back toward the same question. If the old system still looks like a private club every time a major event hits, why would younger investors trust it more than an open network they can verify themselves? That is the real takeaway. Watch oil. Watch whether this ceasefire holds. Watch whether regulators or exchanges say anything about that $950 million trade. Watch whether the relief rally in shares continues. And watch Bitcoin, because if this whole thing stabilizes, crypto may keep running with risk. But if the situation breaks again, then we are right back into the deeper test of what Bitcoin actually is in a real global crisis. And that is where this story comes full circle. A current financial crisis, a suspiciously timed oil trade, a violent move into shares, a surge in crypto, and one underlying message running through all of it. Follow the money, and you usually find the truth before you find the explanation. Thank you for listening. Make sure you're following the show, and as always, we will see you at the top.